Hello, my name is Robert Tufts. Lee asked me to re-record this information that I recently presented at the Alabama Agricultural Outlook. I've changed the slide order just a little bit. So I'm going to talk about how would a Biden administration increase income tax. There are also some tax decreases, but we'll not be talking about those in this presentation. I mentioned I'm Robert Tufts. I taught at Auburn University in the School of Forestry and Wildlife Sciences for 36 years. I've been retired for about 5 years, and I'm currently a visiting professor with Auburn University. The presentation that I'm about to make came from a couple of University of Pennsylvania studies. They have a budget model that they have used to analyze proposals from Biden's webpage. I've given you the reference to those on this slide. Bloomberg Tax and Accounting also had a good comparison. The first topic and the one that's probably of most interest to landowners is eliminating Section 1014 that allows you to have change of basis to fair market value date of death. We used to always say step up, but we found out in 2007 and 8 that it can go down. So the law was that when a decedent transfers, let's say appreciated assets in this case, then the tax basis is the fair market value at date of death, and of course there's no tax due. So basically what this does is eliminate capital gain. So a little example I've got there, let's say you had land that was worth $1 million and you had only paid $400,000 for it 10, 15 years ago. So you leave it to your children at death. There is no tax due, and then they actually get a step up in basis to fair market value date of death, or the $1 million. So if the children sold it, that $600,000 of capital gain that you realized would basically disappear. Under the new proposal, not only are they eliminating the step up in basis, but they are considering that the transfer would actually be treated as a sale. So same example, if you left the $1 million asset to your children and your basis was $400,000, it would actually be treated as a sale, and on the decedent's final income tax return, they would have to recognize the $600,000 capital gain and pay tax on it. The only good news, of course, is once you pay the tax, then your children's basis would be the $1 million. Speaking of estate planning, the other thing that Biden would like to do is reduce the applicable exclusion amount. And of course, that's the amount that you can transfer tax-free. It's currently $11.58 million, indexed for inflation since 2011. The Biden administration would like to go back to $3.5 million. The other thing of concern to landowners is the elimination of the like-kind exchange. So the Tax Cuts and Jobs Act eliminated like-kind exchanges for personal property, but retained it for business and investment property. The Biden administration, again, kind of like the step up in basis. If you exchange property, it would be treated as a sales event, and you would end up having to pay tax at the time of transfer. Some other revenue raisers are increasing the top tax rate back to 39.6%. Currently it's 37%, but of course that's only until 2026. It dropped to 37, and of course everybody's tax rates dropped by about 2 or 3%, or all the tax brackets did. That law sunsets at the end of 2025. So with no action at all, we will be going back to the 39.6 in 2026. The other difference, currently you don't hit the maximum top rate till you have about $628,000 of income. Biden has kicked the number 400,000. If you have heard any of his speaking events, he's not raising taxes for anybody making over 400,000. The Wall Street Journal says that only 1.8% of individuals make more than 400,000, and they think he picked that number so that it would not affect any middle class earners or his supporters on the coast. Another thing that he wants to change is the qualified business income deduction. So again, this is another Tax Cuts and Jobs Act where you get to deduct up to 20% of your income from a pass-through business on your personal income tax return. There are estimated 43 million pass-through businesses in the United States. If he does manage to eliminate that, of course, it will increase taxes for all of those 43 million people. Another income raising provision is Social Security. So right now, the Social Security 15.3% is divided into two pieces. There's the old age, survivors, and disability insurance, and then there's the Medicare. So currently the OASDI has a wage cap of $137,700. Income over that, you do not pay the 12.4%. You continue to pay the 3.9% in Medicare. What Biden is proposing is to have the 12.4% kickback in for individuals that earn $400,000 or more. So when you add the 12.4 plus the 3.9 Medicaid plus the 0.9 ACA tax, that would mean a total tax of 16.3% for individuals making more than 400. Another item to increase tax, certain capital gains and dividends are currently taxed as capital gains at a preferential rate or at the capital gains rate. Current maximum is 20%. It could also incur a 3.5% net investment income tax. The proposal is for taxpayers with more than $1 million in taxable income. They would lose that preferential treatment, and all of their capital gain and dividends would be taxed at ordinary rates, and of course at the maximum rate of 39.6%. He's also proposing to limit itemized deductions. Currently, we have the $10,000 limit on how much you can deduct for state and local taxes, and there are no deductions for miscellaneous itemized deductions. What Biden proposes is to limit the amount of itemized deductions you can claim to 20%. So kind of like the current 60% limit on charitable contributions, you could only reduce your taxable income by 28% due to itemized deductions. He would eliminate the SALT limit. So those are the individual. If we look at corporate, Tax Cuts and Jobs Act reduced the current corporate income tax rate to 21%. And of course, we're talking about C corporations, not pass-through entities. He is proposing to bump that rate back up to 28%, which is still lower than the 35% that we did have. They also have a new provision. There are some companies that make money on the book side, but because of things like depreciation, they end up with no taxable income. So C corporations with more than $100 million in book income would have to pay the greater of their ordinary corporate tax liability, or 15% of the book income. Some of you may be affected by the global intangible low taxed income. So if you have offshore income, you may know about this. It won't affect too many people, but corporations are currently allowed to deduct 50%, and the Biden proposal will reduce that to 25%. He also wants to eliminate some of the fossil fuel subsidies, so pushing toward or getting away from carbon-based energy production. So he's talking about removing the expense for exploration and percentage depreciation cost recovery rules. So here's kind of a look at what or how much money would be raised by each of these provisions. So the top part of it there is kind of for individuals. So Social Security would be the biggest income generator. The step up in basis is not as much, the corporate tax anyway. So you can see the income they expect to raise in 2021. I put the 2022 numbers out there also. And then just to look at who is affected, remember, if you're making under 400, you're not supposed to pay any more tax. And so the budget model for Wharton Business School at University of Pennsylvania says, well, maybe not quite. So even the people at the very bottom will have a small, so they think 31% of the people in the bottom will end up paying a little bit more tax. The average increase is only 15%. So you can look at the other numbers there. So if you look at the 95th percentile, you can see their taxes go up about $4,000 a year. If you're over 99%, that of course is where we end up seeing significant increases in income tax. So the Penn-Wharton budget model looked at the 10-year budget window, and they said that the tax increases would raise about 3.375 trillion. However, he is proposing an additional 5.37 trillion of spending. And the problem with that, of course, is that doesn't include the student loan forgiveness they're talking about, reinstating the individual mandate and eliminating the 400% cap on the ACA. And he is also, of course, proposing environmental regulations, which will have a trickle-down effect and probably increase taxes on everyone. All of this, of course, presumes that he can pass tax legislation, and that will depend on the outcome of the Georgia Senate elections coming up January the 5th. So he has a plan, but his plan is going to require legislation, and he will have trouble passing legislation if he can't control the Senate. So that would be the end of the presentation. Thank you for listening.